Sometimes the question appears in the quietest moments, when the world feels paused and your mind is left alone with the numbers. You might be reviewing your portfolio late at night, a lukewarm cup of coffee at your side, scrolling through statements that don't seem to move fast enough. It's not panic, and it's not excitement. It's a subtle pause, a thought that quietly surfaces. Am I truly ready for what's ahead? Is my portfolio resilient enough to withstand what I can't foresee? That small moment of awareness is where everything begins. My name is Anderson, and I've spent over 15 years analyzing markets, observing investor behavior, and helping people navigate decisions that define their financial future. What I've discovered is this: the most transformative lessons in investing are rarely flashy or loud. They live in the quiet, invisible choices we make consistently over time. Most people think resilience in investing comes from timing the market, chasing returns, or diversifying in obvious ways. They assume that wealth preservation is about skill or luck. But here's the contrarian insight. The true test of a portfolio isn't in booms, it's in crises. And few investors realize that one particular ETF, quietly operating since 1974, has weathered every major market crash and recession, consistently delivering stability and long-term growth. It's not about hype, flashy gains, or trendy sectors. It's about endurance, compounding, and psychological security that comes from understanding thresholds few recognize. Before discovering the implications of this ETF, many investors operate in survival mode. Decisions are reactive, dominated by fear and scarcity. A sudden market drop feels like a catastrophe. Headlines about recessions, geopolitical tensions, or interest rate changes trigger emotional reactions rather than thoughtful strategy. Small errors selling too early, overreacting to volatility carry outsized consequences. Every financial choice is fraught with anxiety, and mental bandwidth is entirely consumed by the question of what could go wrong. Then there's a subtle, almost imperceptible turning point. As you study the ETF's historical performance, something clicks. You notice that it isn't just resilient in minor corrections, it has endured oil shocks, the 1987 crash, the dot-com collapse, the 2008 financial crisis, and the pandemic downturn of 2020. The lesson isn't luck, it's structure. The ETF's design captures the forces that matter: diversified exposure, risk-managed allocation, and long-term compounding. It is a mechanism that quietly protects wealth while positioning it for growth. Understanding this threshold changes how every subsequent investment decision is framed. Crossing that threshold transforms financial life. Suddenly, downturns are no longer terrifying. Recessions become manageable challenges, not existential threats. Emergencies exist, of course, but they are contained, optional, and strategic. The world hasn't become less volatile, but your relationship with it has. Investing shifts from reactive behavior to intentional design. Growth mode emerges naturally when fear no longer dictates choices. The ETF becomes more than a tool. It becomes a foundation. Decisions compound, clarity grows, and mental bandwidth returns to evaluating opportunities rather than mitigating anxiety. Consider the math with realistic numbers. Suppose you invested $50,000 in this ETF in the late 1970s and contributed $10,000 annually, maintaining a disciplined approach with moderate, consistent returns of around 7% per year. Decades later, that same allocation quietly grows into a portfolio worth over $2 million. There's no magic formula. There's no luck in timing the market. There's patience, consistency, and understanding that compounding operates invisibly until it manifests profoundly. That's the invisible threshold at work, the point at which strategic positioning over time generates security and optionality that feels disproportionate to daily effort. The psychological transformation that accompanies this understanding is subtle but profound. Compare survival mode to growth mode. In survival mode, fear distorts perception, scarcity dominates decisions, and stress magnifies minor market movements. Growth mode operates differently. Mental bandwidth expands, decisions are made from optionality rather than necessity, and small fluctuations lose their emotional power. Previously, stressful events, like a market correction, are now inputs into a broader evaluation. Opportunities feel different, emergencies feel contained, and financial autonomy grows in tangible ways. This is also where identity shifts, discipline, delayed gratification, and strategic patience become part of who you are rather than burdens you bear. You no longer obsess over every small market movement. Coffee purchases, subscriptions, or minor discretionary spending pale in significance compared to life-level financial decisions. Housing, career trajectory, healthcare planning, and investment allocations dominate your attention. Scarcity gives way to control, fear recedes, and strategic thinking becomes the default mode. Walking away money becomes possible at this level. The ETF, by design and historical resilience, serves as leverage for broader financial and life decisions. Posture, confidence, and patience amplify your negotiation power in career moves, investment opportunities, and lifestyle choices. You approach decisions from strength, not desperation. The compounding of confidence mirrors the compounding of capital. That foundation doesn't feel flashy, but it quietly shifts outcomes over time. Yet, milestones come with cautionary reminders. Owning resilient assets can tempt one toward lifestyle inflation, speculative risk, or impulsive decisions. Each decision carries an opportunity cost. A luxury purchase or speculative allocation today may reduce freedom decades from now. The ETF isn't a reward, it's a foundation, a seed from which stability, clarity, and optionality grow. Treat it with respect, not indulgence. Acceleration is subtle but tangible. The portfolio doesn't plateau at $1 million. With continued disciplined contributions, reinvested gains, and patient allocation, growth compounds geometrically. $2 million, $3 million, even $5 million becomes feasible without altering daily behavior, provided discipline and strategy remain consistent. The accumulation is invisible day to day, but transformative over decades. Patience compounds into freedom, clarity compounds into confidence, optionality compounds into opportunity. Career and life-level decisions evolve in parallel. Offers are assessed for alignment, not desperation. Housing and transportation choices are evaluated strategically with long-term implications in mind. Healthcare planning, emergency funds, and additional investments are aligned to maximize leverage and minimize reactive stress. The ETF's reliability provides a base from which to make intentional, confident life decisions. Opportunity cost framing becomes second nature. Extravagant purchases, impulsive trading, or high-risk ventures carry emotional weight. They subtract freedom, not just money. Each allocation or lifestyle choice is evaluated in light of decades of future optionality. Strategic preservation ensures that long-term compounding is not interrupted by short-term indulgence or panic. Future self-thinking dominates decision-making. Imagine looking back decades from now and appreciating disciplined allocation, patient positioning, and thoughtful financial design. Gratitude emerges naturally, not for wealth, but for clarity, freedom, and control. The ETF isn't just a financial instrument, it's a lens for understanding how disciplined, intentional decisions compound into life-level security and opportunity. Finally, the ETF that has endured every market crash since 1974 isn't a shortcut to wealth. It's a foundation for control, clarity, and optionality. It transforms fear into strategy, scarcity into confidence, and reaction into intentional design. The threshold isn't a prize, it's a seed, a quiet mechanism that aligns patience, strategy, and psychological freedom. It shifts decisions from survival to growth, stress into opportunity, and volatility into manageable evaluation. So remember, resilience in investing isn't about timing the market or chasing returns. It's about recognizing thresholds, allocating with intention, and allowing compounding to work invisibly. My name is Anderson, and the choices you make today, thoughtful, disciplined, and patient, create a foundation that lets your future self navigate uncertainty with confidence, clarity, and quiet freedom. Thanks for listening. I'll see you in the next video.